how did your background in econ and finance and all those subjects you studied for so long, so intensely come into play? I mean, I'm thinking right away of the idea of sunk cost. Like a lot
Right.
of people just cannot get past that barrier, but like you had paid for flooring, you got to repay for flooring.
Right.
And I mean, and honestly, did your background in your studies play a part in just your mindset of like, okay, well, it happened, I paid for it, I've got to pay for it again, I've got to move forward.
Yeah, you definitely have to have the mindset in instances like that of being able to just, flush the errors, right? Just get rid of them and forget them and make the next decision the right decision.
Welcome to the 256. I'm JD, host of the 256 Investor Podcast. This is for both the seasoned investor building a portfolio of rental properties that wants to sharpen their skills and for the potential investor that needs to answer some questions and gain strategies to invest with confidence. We'll discuss all things investing, legal, tax planning, acquisitions, insurance, and of course, we'll discuss real life experiences with 256 investors. Whether you live in the 256 or invest from afar, this is for you. Thanks again, and welcome back to another show of the 256 Investor Podcast. We have Russ Hayles with us today. How's it going, Russ?
Going great. Nice to be here.
Good to have you. You're a fellow real estate agent, investor. What came first for you?
Real estate being an agent really was the first part of it. I went into it knowing that I wanted to be an investor. But I was a teacher first, taught high school, college for a few years, coached high school basketball as well, and did that for just under a decade and really just kind of got tired of that and knew that I had interest in real estate, knew that I wanted to kind of go into that world. Um, Went ahead and took the licensing tests and uh, went through all the procedures to be an agent. Started off there, started on my first flip, really the first year that I had a license, and then from there just kind of progressed more. Did one a year for a couple of years, and then progressed after that. So
And you've been in this Huntsville, Madison market the whole time as an
yes,
investor, correct?
yeah. As an investor, I've been here for 11 years.
But you didn't grow up here.
No, no, my wife is from here originally, but I'm originally from the south part of the state, down by Atmore, Alabama.
Yeah, okay, close to the beach.
Yep, down by the beach.
And you went to school at Auburn.
I did. Yep. Graduated from Auburn '05 for undergrad and '06 for graduate school.
And what was your major? What was your focus there?
Economics on both of them. So I did undergrad econ and then master's degree in economics and did that for, like I said, taught college in that for a few years and then went on to teach high school. I really wanted to get into coaching, so
Okay. Was
I was
that was that your life plan to be a
Uh,
coach, a teacher?
well, not necessarily my life plan, but I always knew that I wanted to coach. I enjoyed basketball, played basketball all the way through high school. It's a passion of mine just on the side. And so knew that I wanted to get into it. And really getting into the college side of it is just too challenging. If you didn't play college basketball, it's really hard to get into it. And so I knew that I wanted to coach. I got into it, loved coaching, still love coaching, but don't I didn't have the passion for teaching after the first couple of years. There were aspects of it that I loved. There were other aspects of it that I just never really took to. So
Yeah. Sounds like there was a ceiling, well, that you could get past, but it takes a lot of hours.
it does,
It's a grind to get there.
and it can be a connection business as well. And if you don't have those connections, it can be hard as well. So
Yep. Yep. So you get your real estate license and immediately start flipping properties. Did everything go as planned and just start rolling from there?
no, not really. No, the first house that I bought was on a busy street here in Huntsville on Whitesburg, and uh, I thought I did buy it for a good price and had a good plan on it, but as we got further and further into it, more and more things became issues, and I knew that most of the house was going to be need to be renovated. It needed all new exterior siding. It needed a new roof. It needed all new windows. It needed the subfloor pulled out, all of it, right? And so I was doing all of that, opening it up. It was a house built in the 1920s,
Mm.
and it needed all new electrical, all new HVAC. So we were doing all of it, right? Um, and as it went along, even more started to come up. There were foundation issues that needed to be done, and so found some of those out when I needed to find them out, found about the foundation issues after we'd already done most of the other work. And so then you had to go back and fix things that it had to get corrected after you had done the foundation problems. And so that part of it was a learning experience for me. I took it as that. It was not a property that I made money on. That was fine. However, it was right on a busy road, and so I took advantage of that as a real estate agent and was able to put a sign out. And I actually drew a bunch of clients off of that. And so, in the grand scheme of things, I didn't lose any money off of it. I actually made money, but based on those relationships. But on the property itself, it was not a win for me. So.
Well, you did the best out of a tough
Yeah,
situation.
tried to kind of use all of it and anything I could learn from it, and that worked out better.
Well,
So
you made a good point. It's nice to be in this business full time as a salesperson and as an investor, because you said putting a sign out there got you some leads, and it sounds like you actually had some transactions go through
oh yeah,
due to that. And one of the things that's always tough for so many investors is because they have a full-time job, or people who are, in real estate, they're doing real estate sales, but they have a full-time job. It's really hard to do both,
it
like two
is.
separate worlds. It
It
is
is.
really hard. But when you're in this full-time and it's real estate activities, 100% of what you're doing to earn money, it makes sense sometimes when it shouldn't, right?
Yes. Yeah. And it was a part of my plan when I bought that house. I said, well, in the end, it's still a house with good exposure, a property with good exposure that if I make it look nice, I'm going to get traffic. I'm going to get. And so I did. I probably overdid it for the area at the time. I was a little bit ahead of some of the newer construction along Whitesburg Drive there that was upgrading the housing along that area of Whitesburg Drive. And so I think that house was the first house to sell for over 300,000, over $200 a square foot along Whitesburg, but it still it took too much to put into it to get it to that point. And so I was, like I said, I was happy with how it all worked out in the end. In the grand picture of everything, it turned out to be a project that was more than worthwhile, but for the project itself, it lost money. So
So that was around 2013, 2014.
yeah, that was right. Probably 2015, I think, is when I finished it. So 2014 is when I started on it, and 2015 is when we finished it.
Yeah, so we really hadn't turned the corner here yet.
No.
If you had held on to it for a year and a half, 2 years,
Yeah, yeah.
it might have been a big win for you.
One of those things you always hate to do is go back and look at what you sold stuff for years ago. It is, and see what it sells for now. Yeah, it hurts a little bit to go back and look at it and see, oh, if I turned it into a rental for a few years and held on to it, it would have easily turned a profit. But at the time, that wasn't what I was doing. I wasn't doing rental properties. I just was flipping houses, and that was the first one that I did. So
It sounds like you may have had to backtrack and fix some things that had already been repaired. Like you mentioned, foundation issues. Did that like break some tile flooring that you had to go back and replace and that kind of thing, like double paying for the same thing?
correct. Yeah. So a lot of times when you do foundation work, especially, you will get drywall cracking. You'll get shifting of floors. So tile floors are notorious for it. Countertops can happen sometimes, especially depending on how they're attached. If you do things like waterfalls and things of that nature, they can. This house didn't have any of that, but tile backsplash had to get redone. Some of the tile floors in the areas, especially where we lifted and raised the floor, sometimes you're lifting it 2 or 3 inches, and so yeah, that can be
Yeah.
stressful on those types of things. So
Anything that has thin set or grout,
anything with
or
thin set,
anything that
grout,
sets hard, it's going to
yes,
crack if
yeah,
the house
yeah,
shifts.
yep.
So I'm assuming you learned some pretty important
Yeah,
lessons
yeah,
there
yeah.
about an
We
order of operations.
order of operations is important, and we had it. The the contractor that I was using at the time had gone under and looked at the house and told me he thought there were some areas that needed to get fixed. He thought he could handle it. Wasn't a big deal. He was going to get it done. He didn't do it properly. What I learned more than anything was I needed to educate myself on what proper was going to look like and how it needed to be done. And so from then on, I've learned more about it, and I've gotten better at making sure that the work that's done is the correct work and done not just to code, but what's proper and ethical. So
Yeah. How did your background in econ and finance and all those subjects you studied for so long so intensely come into play? I mean, I'm thinking right away of the idea of sunk cost. Like a lot of people just cannot get past that barrier, but like you had paid for flooring you got to repay for flooring.
Right.
And I mean, and honestly, did your background in your studies play a part in just your mindset of like, okay, well, it happened, I paid for it, I've got to pay for it again, I've got to move forward.
Yeah, you definitely have to have the mindset in instances like that of being able to just, flush the errors, right? Just get rid of them and forget them and make the next decision the right decision. Um, and so that's been the focus when we make a mistake or when something is found that changes our course. Um, we can't let prior decisions impact our current one. And so we always and at the time I always wanted to try to make sure that I was doing what needed to be done. Um, and now obviously the goal is to catch it before. And if you catch it before, that's even better for you. But when it does happen, you wanna be able to kind of remove that previous decision that you made and just make the correct decision for now. So
Yeah, I'll share this only because you're here. And I had an econ professor named Robert Alt
oh yeah,
at Auburn. I know that you knew him,
yep,
and he explained this so well one day. I dropped the class, by the way. It was a struggle. That was a tough class, but I
yeah,
learned one good lesson. He said, imagine you book a place at the beach for a week-long vacation in the summertime, and you put down a non-refundable deposit, which always happens. I'm assuming that still happens
yep.
with the beach reservations. And he said, but then you get an invitation in the mail, your best friend's getting married, and you're supposed to be in the wedding, and it's the same week of the trip. You can't get that deposit back that you already made, but you would rather be at your friend's wedding.
Yep.
You just can't miss it. And that's the theory of the sunk cost. You just have to
Correct.
let it go. You
Yep.
say, I'm going to eat that deposit. I would rather be at this wedding because if I miss the wedding just because I need to hang on to my deposit, like I'll kick myself for the rest of my life for that. That's the one lesson I got from that man. I dropped the class like the next week, but that has always stuck with me because I did that. Like growing up, in the
Oh
south
yeah.
part of the state, we had those trips to the beach where it got canceled day one because a hurricane,
Oh
tropical
yeah.
storm was coming in, and they weren't forecasted that well,
Nope.
30 years ago.
No.
And
No.
we would literally have to pack up and leave. And it's like, guess what? You're not getting your money back.
Yeah,
This
they're
was
not
your
refunding
one
you for it.
vacation for the
Yes.
summer. So that's always stuck with me. But that's always helped me, in my investing career. We're all going to make mistakes. We're all going to pay for things that we're never going to recoup. We're not going to get a value out of it. But in your mind, you just have to move forward and say, it's a sunk cost, it's done. There's no point in regretting it or like hanging on to this.
Yeah. Yeah. And it's a mindset that you have to get through, right? There can be almost a defeat aspect of it. You feel defeated because you made a decision that's costly and you're not going to see any benefit out of it. Um, and it can psychologically impact you and force you to make bad decisions if you don't kind of go into it with that mindset. So
Yeah.
it is important. It's funny you mentioned Dr. Alt. He was one of those professors. For those that went to Auburn and knew him, he either you loved him or you hated him.
You clicked with that guy or you
And he
hated
and
him,
I,
and
yeah,
it didn't work out with
he
us.
and I got along, and I took every class he ever offered at Auburn, and used to go hang out in his office all the time, and other people just couldn't stand him. So yeah, yeah,
Yeah, not only did I drop his class, I dropped economics as my major.
yeah.
And I
He could
went into
scare
accounting. That
he
worked
could
out a lot better
he
for
could
me.
scare you for sure. Yeah, he could
Yeah,
scare you for sure.
but
So
but he did teach me that one good lesson. But I've
yep,
heard, I can't tell you. I'm sure you've had clients too that you're selling houses for. You're going to list a house, and they say have to get X amount of dollars, and you may say that's not going to happen. Here's what the market is going to pay for your home, and they say, but I just paid for a brand new HVAC. I paid for a brand new roof. I put new windows in. I have to recoup this money. It's like, it doesn't matter what you think you should have. You paid that money. It's gone.
right.
Do the best you can with selling this house if you have to sell it right now. It's just such a mental hurdle for so many people.
Yeah.
And it's not based on rationality or,
No, it's not. And there's especially when it's your personal home, there's factors in there, emotional factors that impact people's decisions. Investors don't usually have those. At least they try not to. But if it's your personal
if
residence,
they're well prepared, they
right?
don't.
There's definite emotional factors in there for homeowners, and so it. I always tell them, don't view it as though you wasted money. You just spent money so it wouldn't cost you on your sale,
Yeah.
right? Because if you needed a new air conditioner, that was going to come up. If you needed a new roof, that was going to come up. So you might have felt like you were going to get 500,000 for this house before, And maybe you would have, but when you had your inspection and everything got checked, you were going to be paying for these things.
Yeah, it may
Right.
not add a dollar value
Right.
to your home sale, but it could be the reason someone doesn't purchase your home
Correct.
and purchases a comparable
Yeah.
home.
So, and there's multiple factors on selling a house, right? It's the timing of it, and how long your house is on the market, right? Would if a house takes 1 week to sell, is that better than if it takes 8 months to sell, right? And so, just depends on the buyer, on the seller, and the circumstances they're in. And that's always something for me. I always try to listen to, like, what is your motivation? How long do you want it to take? Um, and I kind of give them options,
Right.
and let them make choices, informed choices, and then we try to react to the market. So, and I do the same thing as an investor. My business partner and I, we come up with a plan when we buy the house of what we're going to do with it, and then as we're getting through the project, we adjust to what we've done with the house. And if it means that we're going to hold on to it as a rental, then we adjust. If it means that we're going to go from having it be a rental to be a sale, then we adjust. We try to stick with our plan, our original plan, as much as possible, but it doesn't always occur that way. It doesn't always work out that way. So, um, being able to adjust, and then we do the same thing on when we list things. So, what's our plan? Does this one need to sell quickly? All right, we're going to price aggressively. Is this one we can be a little bit more patient with? Okay, then maybe we'll price it a little bit towards the higher end of the market and wait for that single buyer that sees the value in it that we know is there. So,
And you flip and you buy and hold. Do you
we
have a
do.
strategy there? Do you do one for one or one for two?
Not necessarily a one for one, one for two. We really evaluate each individual property, to see what we think its best outcome is for us. And our first goal is to have them as buy and holds. We would prefer to keep them as buy and holds. Um, Secondly, would be to have it be a quick turn flip. And then probably the last one is a larger scale remodel with a longer turn on it. We try to do fewer of those, just because there's way more risk and there's way more variables involved in it. So,
So it's not so much a targeting strategy that you're going for a specific property, but rather what's available is what it sounds like is what's out there on the market will dictate what you do
yeah,
with the property.
somewhat. So, if I go see a house, and as far as my business partner and I, kind of the strategy and the division of labor that we have is that I source the deals, I go evaluate them, I come up with a plan. Um, he handles the book side of things. He handles all of our bookkeeping. He handles all of our, the finances of our company. Um, and that allows me to kind of go out and plan, and it also separates those so we're not making bad decisions for the project based on finances, or bad decisions on our finances based on the project, if that
Mhm.
makes sense. And so, um, we feel like it's a good division of labor. It's worked well for us, and kind of allows both of us to do what we're best at. Um, Now, on the individual kind of targeting of properties, what we typically find is I'll walk a house and look at it and come up with a plan of what I think is the best course of action for it. So, if it's a ideal rental, which for us an ideal rental would be a 3-2, somewhere in the neighborhood of 1,200 to 1,500 square feet, somewhere in the neighborhood of a 15 to a $25,000 remodel on it. And so we kind of know that if it falls in this category, we're targeting to make it a rental. And then if we can end the project where the rental price is more than offsetting, obviously, on a cash flow basis of what our cash flow, our cash output is going to be for it, then we're going to be fine. We're going to keep that as a rental and hold it. We don't have a business plan or a business model that's really focused on the cash flow side of it. We're really long-term investors, much more on the equity play side of things. If things are balanced or slightly positive on the cash flow, we're going to hold on to them. If they're really cash flow positive, then we're going to hold on to them for sure. And we probably have, of the 20 something properties, I think we've got 26 right now, 25 or 26. Probably 5 of them are solidly cash flow positive. On a cash on cash return greater than 20%. Um, on the others, we're probably, less than 10% on cash, and some of them are even less than 8 or 7%. Um, the rest of it, if it's lower than that, then we're probably going to be turning it into a flip, right? We're going to turn it around and sell it and pull our money back out of it and kind of move to the next thing. So the flips are really used as supplemental to finding additional long-term holds for us.
Right, provide some capital to
Provide a little bit of capital, keep us active, keep us busy, keep us looking, and it also keeps us in the minds of sellers because we're about 50% on market of what we bought and 50% off market. So we buy from wholesalers. Most of those are off market deals. And we buy about 50% of our stuff on market as well.
Yeah, and that's why I brought up availability. It sounds like you're just kind of open to whatever's out there, not necessarily going strictly for wholesale deals.
Yeah, yeah. And we don't have a target. We went 9 months and didn't purchase a property, right? If they're not working, yeah, right. We're good.
It can be tough.
Like that. We're okay with that. And then we might have 5 properties that come up in a month that we make an offer on, and so it just depends. And then we're making offers all the time. They're just not getting accepted, right? Like, so we may see a property that's listed at 175,000, and I go look at it and go, we offer 105. See if we get it. If we get it, great. If we don't, they found somebody better. That was better for them. That's fine. But it only makes sense for us at that 105 number.
Right. So after 11 years of doing this, you've got over a couple dozen rental homes that are long-term holds. I'm assuming none of those are condos, townhouses, that kind of thing. They're all single family.
Yeah, they're all single family.
Like 3-2 ranchers.
Mostly 3-2. We've got a couple of 3-1s. We don't have any 2 bedrooms, not by design. We just haven't really found any that really fit for us. And we've got a couple of 4 bedrooms, a handful of them, probably 4, I think is what it is.
Converted garages, that kind of thing that make the 4.
Yeah, some of them are converted garages. Some of them are just slightly larger houses.
Yeah.
We bought a couple of properties in 2022 that the goal was to turn them into short-term rentals, and then the city really cracked down on short-term rentals, and and made it much more challenging to run a legitimate short-term rental business inside of Huntsville, and so we just pivoted away from it, and one of those turned into a rental for us. We were able to make it make sense on a long-term rental market, but the other we had to go ahead and turn it into a flip and sell it. So.
Yeah, no multifamily duplexes, quads,
none yet.
Thing.
Again, we've looked, we've made some offers on things. The
numbers really have to work in that
situation. They do. Yeah, they do, and they have to be really cash flow. Centric for us. They would have to make sense on a cash flow basis. We're not going to buy them on a speculative basis, especially with all of the multifamily getting built here in Huntsville. Yeah. So,
and we won't go down the short-term rental path a lot because it has been shut down in Huntsville. It's important for people to know that you really can't have the nightly rental anymore. It has to be a minimum of 180 days. You have to have a signed lease for a minimum of 180 days. There are a few exceptions. There are certain zoning areas that allow for Airbnbs and verbos and stuff, but it's really tough. Those are very difficult areas to put one in service. So it's essentially outlawed in the city.
Yeah, it is. And there's still some operating, obviously. There's still some availability out there.
It's a huge risk. A lot of people are still opening all the time.
Yes.
But the city will take you to court.
Oh,
and
yeah.
They will make you pay back taxes and fees and fines.
Yeah, like I said, it was when they changed everything. The first thing I did was call the city and say, hey, we have 2 houses, these 2 houses in these 2 areas. There are operating short-term rentals across the street, next door, everywhere. Right? Wanted to see if we would be within the confines, within the laws to operate, and they were like, no, you wouldn't.
Even if it is allowed, you have to purchase a permit and you have to pay a lodging tax or whatever it's called.
Correct.
And it's very difficult to do. So I just want to make the point that it is a difficult thing to do. You and I have both done it until it was not okay anymore.
Correct.
And So,
Well, and it caused a lot of pivoting, I feel like, because there were a good number of investors that had kind of gone into that business plan, especially in Huntsville, and they had to pivot away from it. And for the most part, that meant either going to long-term rentals or selling those properties if they didn't make
a
sense.
lot of out-of-state people came in. There was
Yes.
one person from California who had literally 16 rentals on one street in South Huntsville.
Oh,
And going all in like that, basically on a knee-jerk emotional, well, this is profitable, so I'm going to sink everything I have into doing this very certain type of investing in this one city,
yep.
is really aggressive. At the end of the day, like I think you and I and a lot of investors that have been on this podcast do it the right way that's going to be healthy in the long term. Like the 3-2 rancher, it's going to be there forever.
Yep.
It's always going to work. You can do Airbnbs and different ideas that come along, and
Sure.
they may be profitable, but I don't know they're necessarily sustainable.
Yeah. Yeah, I agree. And it was, like I said, it was a plan that we had, seeing the properties. We thought they would really do well, and they would have. And for a short period of time, they did.
Yeah.
And when they followed all the rules and everything, we were following the rules at the time. But when those rules got adjusted and they got restricted, then we had to pivot away from it. And so that's fine.
But you don't just cease operations. You keep going with what you've been
Right,
doing for 11
right.
years.
Convert it to something different. So either a long-term rental or turn it around and sell it. And so we've kind of pivoted to that.
So what's the long-term plan? Accumulating, a couple of houses a year at this rate for buy and hold, not to mention your flips. What's the long-term plan down the road when we do have the appreciation you're expecting from all these homes?
Yeah, I mean, we would, I think primarily our goal is to get to, somewhere in the neighborhood of 20 to 30 properties that we own, either debt-free or close to debt-free by the time we want to retire. Right. And then have those properties as income properties at that point. That would be great. And so, as what we'll do is we'll work to selecting the properties that we want, and it may turn out that we don't need 20. We may only want 10. And if we own 10 outright that are all good cash flowing properties in areas that we want to hold on to, we'll sell the others and pay off those 10 and get them to just be 100% cash flow for us. We're not in an infinite growth mindset, I guess is the best way to put it. I know there are investors that will and do that. We are much more on the sustainability side of things and trying to be in that world. So,
have you considered 1031 exchanges, trying to do a 1 for 2 or something like that to
we haven't
grow
yet because we
overnight?
haven't done wholesale selling of properties where we've sold multiple at once. And on the 1031 exchanges, we haven't done them on the stuff that we've flipped up until now, just because the unpredictability of finding what it is that we want to buy. Yeah. And so, having to have that property targeted and marked before or within a certain time period of selling that property, we don't want to get handcuffed into making a bad buy because we have to for tax purposes, or otherwise we realize all of these other gains that we've had in the past. Right. And so we'd much rather just kind of play it conservative and do it. Would we make more money doing it another way? Sure, but we feel like it's a safer way to handle it.
Yeah. So. Well, the greatest ability is availability.
Right.
And it's that's what you've made work for so long, is availability of a property.
Yeah.
And if it's not there, like you said, in a 1031 exchange, you do have a really tight window to identify properties and then to close all the purchases. So, if it's outside of your wheelhouse, then right. Keep doing what you're doing. It's working.
Well, in uncertain times, availability is great. I feel like flexibility is huge. And so if you're able to be flexible in an uncertain time and adjust to what's there, you're going to be able to adapt.
Yeah.
And if you're stuck doing one type of thing, then you may not be able to adapt as easily. And so that's always kind of how we've viewed it, is trying to stay as flexible as we can.
Well, I've got to ask, because you are a partnership,
mm-hmm.
and so many partnerships just don't work out.
Sure.
Most of them don't work out nearly as long as yours has. Yeah. And I know your partner. I'm friends with him.
Yep.
And I know it's working. Are you two on the same page about how to ultimately wind things down one day?
Yeah, we are. Again, we went into it with the mindset of it being the goal to acquire long-term rentals and pay them off, and get them to a point of, being able to supplement income or even provide the income that we were wanting to have when we got to the age that we wanted to be able to step away from our primary jobs. Um, and he's an active physician, and I'm a real estate agent. I'll probably continue to do much of what I do now, even when I quote unquote retire, right? I but I'm 43. I don't plan to retire for a long time, and so I enjoy what I do. It gives me the flexibility on a daily basis to do the things that I enjoy doing, but also, you know, provides what I need it to provide. So,
Yeah, retirement for you and I is a lot different than it is for other people. When you're retiring as a physician, it's kind of done and gone, and
yep,
you might read research papers and follow things, but you're not actively earning in most
correct.
cases. But you and I can continue to earn
Yeah,
from our livelihoods for a long, long time
yeah,
without being super actively involved.
yeah,
When
yeah,
when you have the networks we have, you things come across your lap that you don't even ask for from time to
correct.
time.
Correct. And as a real estate agent, I've never been one on, I don't really market, I don't really advertise. All of my businesses either come from, sphere of influence, um, direct referrals from clients that I've worked on, or the advertising that I get for the properties that I sell. That's really been it. I haven't really ever done wholesale advertising or anything of that nature. And I prospect some, but not like some agents do. Um, just because I spend so much of my time doing the work that I do on the properties that my business partner and I buy and work on. So,
Yeah, essentially all of your revenue is still coming in through real estate sales.
yeah, so my daily, the income that I make is primarily through real estate sales.
Yeah,
So,
anything that you and your partner sell, you're putting back into other acquisitions.
correct.
Like that's not take home pay.
No, I make a commission on sales. I make a commission on purchases. If there's a property that's listed, I make a commission on that. But otherwise, I'm not taking a cut or a percentage of profit out of any sales that we have. So,
Okay. Last question. How do you still play basketball at 43? Because we're the same age, and I was lifting weights this morning, and I like popped a blood vessel or something in my finger, and it's
Uh,
like completely blue. I can't even lift weights without getting injured. So how are
Yeah,
you still so
so
active?
we all joke. I play with a group 3 days a week, and then another group one night a week. So I play 4 times a week, and we all joke that it's basically just an injury fest the whole time. So everybody's got a giant bottle of ibuprofen in their bag, and band-aids and tape and splints, everything else.
Yeah.
It probably takes me 30 minutes to get ready to play, and I can play for about an hour, and then it takes me about 2 hours to recover each time. But I love it. I love playing, um, and I just enjoy being out there and doing it, and being around those guys. It's fun.
Yeah.
I still enjoy it.
So
So
just put on those two knee braces and
put on two
the
ankle
rec specs
braces
and
and yeah, everything else, and icy hot. It takes away your breath when you walk in the gym. So yeah, it's that's the life of 40 plus. So
well, I'm glad you're still able to do it. I think about it and I get injured just thinking about playing
yeah,
again.
yeah,
But it's really good to have you, Russ. Keep doing what you're doing. It's always inspiring and encouraging to talk to you and hear about what you and your partner are doing. I know you're always active. Like you said, you took a break for 9 months or so because there was nothing out there. But
right,
then once it is there, you're right on top of it. And I know
yeah.
you don't hesitate to make a move when it's available.
Yeah, we went a long period of time, and then I think we bought a 4 house package a little bit more than 2 months ago. We bought another house probably a month after that, and so we went 9 months without buying anything and bought 5 houses in a little bit more than 2 months. And so it just kind of depends on the situation what we're
Yeah,
gonna do
like I
with
said,
it. So
availability and we've talked about those four houses you purchased. It sounded like something just came up right at
yeah,
the right time, and um, you got to take what's there.
take what's there, and don't stretch yourself, right? Like have the parameters. We're pretty broad on what we will look for, right? And I'll evaluate just about anything, but um, it's got to fit when it's all said and done. And so if it doesn't fit, then we'll make an offer where we can make it fit. But if it doesn't fit, inside of that, when it's all said and done, then we're not.
I lied. I got one more question because you mentioned the foundation issues and all the things from the first purchase. Has that changed your mind on specific things you're looking for in a property? Are there like hard no's now? If you walk in and you see cracks in the ceiling, that kind of thing, do you go, I'm out on this because I've been down this road?
It really, no. Now, I have walked in houses and immediately walked out of them because I know that the house is
haunted.
It's better off torn down than it is being remodeled, right? And I'm not in the business. We haven't done any full scale tear down and rebuilds. Would I do it in the future? Maybe, but it's not what we do right now. It's too time consuming. It's too capital consuming. So it's just not what we're going to do, right? Now I might turn it around and think of a builder or a contractor that I work with all the time that's looking for that type of project and go, hey, look, I found this house. It's not worth what they're asking for, but you could tear it down and build a 2,500 square foot house and it would be worth $600,000. And so I've done a couple of those and they have ended up buying them and ended up selling them, and I help them on the sales side of things. And so I still go look, right? That's the biggest thing for me. I still go check out properties. So
yeah, there's still a way to earn something from it, even if you're not getting some sort of commission. Ultimately, at least you're networking and
building relationships.
It's all beneficial.
Right. And I've got several different wholesalers that will call me. I got one the other day, texted me, hey, will you go look at this house and give us your opinion? I bought a couple of houses from them. They just want to know my opinion. I call them back. I tell them this is what my thoughts are. And they go, okay, we're probably going to pivot and do something different with it, right? Like they just want to know what my thoughts are on it. And so I try to do that. It doesn't really benefit me in that one instance, but it does in the future because they're also ones to come to me and go, hey, I got this house. I really think it might fit what you're looking for. Go look at it. If it is, it's yours. And so I like having that ability to go.
Don't hoard all the information. Give out some education and advice.
Right.
It's good for everybody.
Yep.
Thanks, Russ. Appreciate your time.
Yeah,
good to see you as always. Thank you to AVO Multimedia for recording this for us. I'm JD. My time's up. I thank you for yours. This podcast is proudly sponsored by 256 Realty, investors helping investors. Visit us at 256realty.net. Big thanks to our production team at AVO Multimedia Services for producing, editing, and providing the music that brings this podcast to life. If you enjoyed this episode, be sure to subscribe or follow the podcast on YouTube, Spotify, Apple Podcasts, Amazon Music, iHeartRadio, or whatever platform you choose. We'd love it if you'd leave a comment, review, and rating. It really helps us grow and continues to bring you valuable content. And of course, don't keep all this knowledge to yourself. Share this episode with a friend who's ready to level up their investment game. To catch more episodes and video content, visit our YouTube channel at 256 Investor.